Hey guys, what's up? Hope you all doing great. It's CA Smith Joshi this side, and in this module I am going to press light upon secondary adjustment which is proposed and implemented with effect from Finance Act 2017. There were various things which were to be prescribed in the rules, and the rules are just framed few days back. And I am going to press a light upon 92 CE as well as Rule 10 CB. 92 CE as well as Rule 10 CB, which provides the nitty-gritties of secondary adjustment. So the question 1, what is a secondary adjustment and why is it incorporated in the Act? So let us take for an example that I made there is an actual price of rupees 150 and the ALP of the purchase price is determined as rupees 100. So 150 may I said that I am making purchases. However, the ALP is determined as rupees 100. So my 50 is a profit which is underestimated, that is underreported. So now after the ALP adjustment, 50 rupees will be brought into the tax. However, is it that I have actually received this 50 rupees? It is just an adjustment which is made because of the TPO order or the assessing officer's order. However, have I actually received this extra 50 rupees? No. So the authority says that this is the excess money. Rupees 50 is the excess money which you should bring back in India from the associated enterprise. If you don't bring this rupees 50 back into the India, then we will charge you interest on this rupees 50 and tax you on that interest, which is called as deemed interest. Okay. So this deemed interest is called a secondary adjustment. So it flows like this. I'll again repeat this. The excess profit, the excess money which is lying in the hands of foreign associated enterprise, if it is not repatriated back into the India, the deemed interest will be charged on that rupees, will be charged on that difference, or that is excess money. So the nitty-gritties is explained in the rule. There were several controversies when this specific section was introduced in the Finance Act. So the one, and as per the explanatory memorandum of the rules, it clarifies on that issues. I will come upon it in the later part. But as I said before, 150, which is the actual price, minus ALP as determined is 100, and this 50 money is excess money to be repatriated. If it is not repatriated within a specified date, and this specified date is 90 days, it is provided in the rules. It is 90 days, and if it is not repatriated, then interest will be charged. If it is repatriated within the period of 90 days, then deemed interest will not be charged. So secondary adjustment is to be made as per Rule 10 CB. So 92 CE says excess money to be termed as advance, interest to be charged on such excess money, and asset and the nitty-gritties as per Rule 10 CB. So the Rule 10 CB highlights on interest rates, relaxation if essay is made within 90 days, as I told you that from a 90 days of this specific date, if the repatriation is made, then no interest will be charged. If it is not made, then interest will be charged as per the following. What should be the rate of interest and from which date should the interest be charged, it is all explained in the rule. The interest rate. The question arises as to what is the interest rate. If the transaction is made in INR or if the transaction is made in the foreign currency. If the transaction is made in INR, then it will be MCLR, which is the marginal cost of lending rate of State Bank of India, as on the first date of the relevant previous year, plus 365 basis point. MCLR plus 365 basis point. MCLR of whose? State Bank of India. Of what date? First date of the relevant previous year. That is the 1st April of the relevant previous year. Now, if it is in foreign currency, then it will be 6 months LIBOR. 6 months LIBOR plus 300 basis point. 6 months LIBOR plus 300 basis point. So it is 6 months. So it is half year gone. So what will be the date from which the 6 months will be calculated? It will be exactly half. That year, the 6 months LIBOR as on 30th September of the relevant previous year. 6 months LIBOR of the relevant previous year as on 30th September plus 300 basis points. And for Indian rupee, it will be MCLR State Bank of India 1 year MCLR of State Bank of India as on 1st April plus 365 basis point. Now question arises in both these limbs, they have specified of the relevant previous year. So is it that the year for which the adjustment will be made is the relevant previous year, or each and every year for which the secondary adjustment is made will be termed as the relevant previous year? Going through the explanatory memorandum, it becomes perfect that each and every year interest will be calculated, and rate of interest for each and every year will be this specific rate. That means the relevant previous year means each and every year for which the secondary adjustment is made. Financial year 2013-14 के रिलेशन में कुछ है. Let's not take 2013-14. Let's only take financial year 18-19 because it is applicable from the specific year. So that's why. Let's take 18-19. Okay. And it is the financial year 2021. Okay, secondary adjustment, it is determined as 150 and it is determined as 100. So 50 is the excess money lying in the pockets of non-resident associated enterprise. Okay, it is not yet repatriated, and it is financial year 2021. It is 3 years and it is still not calculated. So for all the 3 years, 1920, 2021, 21-22, the secondary adjustment will be made for all the 3 years, and all the 3 years the rate of interest will be as on the first date. If it is as on the first date, MCLR plus 365 basis point if the transaction is in INR. If it is in foreign currency, then 30th September के दिन जो LIBOR है 6 months LIBOR as on 30th September plus 300 basis points. It was all about rate of interest. But it is said that if you receive it within 90 days, then it won't be charged. But 90 days from which date? So it is also specified in the rules. No essay is made if within time limit. If I make a suo motu adjustment, I myself make a book adjustment after filing the return of income. So in this case, from the 90 days of due date of filing return as per section 139(1), which the case is 30th November. Okay, 30th November के बाद 90 days के अंदर if I receive a money as well as if I make a suo motu adjustment, in this case this secondary adjustment will not apply. Else, if I am getting assessed as per MAP procedures, mutually acceptable procedures, mutual assessment procedures, the safe harbor rules or advance pricing agreement in this case as well, from the 30th September, from the 30th November, which is a due date as per 139(1), and from that 90 days, if I receive from that 90 days, then there won't be any secondary adjustment. But if I receive after 90 days, then there will be secondary adjustment, and the date will be from date of due date. This period will also be included in the calculation of interest. Okay, if I am after 90 days, the essay will apply, and it will not just apply, this period will also be included. Now, there was one controversy from the date this specific section was introduced. It says that if the primary adjustment is accepted by the assessee as per the assessing officer. So it was said that assessing officer का order आया and I accept it, then it should apply. But if I don't accept to it, I go into the appellate authority, and if I accept the order of the appellate authority, then it should not apply, because the section says is the acceptance of the order of the assessing officer, not the appellate authority. It says of the assessing officer, not of the appellate authority. So it should not apply. People were of this view. However, now in the explanatory memorandum, they have specified that, or not even in explanatory memorandum, but also in the sub-rule 2 of the rules, they have specified that calculation of days of 90 days shall be if you accept to the order of assessing officer, or if you accept to the order of appellate authority, then 90 days from such order. If I get a secondary adjust, if I repatriate money is repatriated after 90 days of receiving of such order, कोई भी appellate authority का या तो assessing officer का, तो जिस दिन वो जो भी ऑर्डर आया उसके 90 डेज तक अगर मैंने रिसीव किया तो नहीं होगा, उसके बाद रिसीव किया तो सेकेंडरी एडजस्टमेंट लगेगा. ओके, सो दिस वाज द इशू कि appellate authority से if I accept then I won't be chargeable to ऐसे, but clarification is now granted through this rule that appellate authority के बाद भी अगर होगा then also you will be charged. This now, as I said you that there was one more query which is sorted in the explanatory memorandum. There is second view which I said before that the clarification is given through the explanatory memorandum. The explanatory memorandum, there was actually a controversy governing it. The controversy was that after the section was introduced, the controversy was that the secondary adjustment shall not apply if the primary adjustment is rupees 1 crore or more, semicolon, and the second limb was that it pertains to the assessment year commencing on or before 1st April 2016. So the question is, because it is and this if it is satisfied, then only it should not apply. The general interpretation was this. Okay, but they knew that there is a, and they thought that it is just a intention of legislator, that it is just a mistake during the legislation, that rather than or they have written and. Okay, so in order to get a as a part of a clarificatory notes in the explanatory memorandum, they have specified that it shall apply for assessment year 2017-18 and onwards, and if the amount is rupees 1 crore, they have provided as an explanatory memorandum to the rules. So it becomes clear that if your primary adjustment is for AY 16-17 and before, it won't apply. It will only apply for your assessments April 17 onwards. April 17-18 is the assessment year, or thereafter if there is any of the assessment years and your primary adjustment is in excess of rupees 1 crore, then it shall apply. It appears that they should write or. However, under section 144C, when one can make a reference to the DRP, dispute resolution panel, in that in the definition of eligible SSE as well, there is a same drafting where they have written semicolon and then they have written and there was a case law of one of the Mumbai tribunal in which they had in favor of SSE. So as a part of interpretation, a foreign company can apply to a DRP at any time, or the Indian company which has undertaken a TPO and which finds it to be a negative can also apply. And it was written semicolon and which also said that two are different aspects. So in the same case, the two are the different aspects, and it is clarified as a part of an explanatory memorandum. If you have any queries, please contact me in my email ID as mentioned, or kindly write down the comment. Kindly share, like, comment and subscribe. Thank you.